Welcome everyone to the daily Volatility Box report for September 3rd, 2019. We are TOSindicators.com, home of the Volatility Box. Today was a dream start to the beginning of a month. We had trades set up on all four indice markets, and all four were successful, with each one giving us a little bit more. The Nasdaq is the one that gave us our T1 and our T2, but the Dow is the one that gave us our best entry. We also had two trades on the 30-year bonds, where the first one was a winner, which gave us our T1 and our T2, but the second trade was a loser on both contracts, and that brought our total P&L to a 406.25 in the bonds. For the day, we had a total of 6 trades that took place. Our one trade in the bond was a loser, which brought our winning rate down to an 83%, and our total P&L for the day was a positive 3,618.75. That's a fantastic way to start the month. It gives us some house chips to start to play with and start to risk for the rest of this week. And usually funky things tend to happen in these shorter weeks, but the fact that we're still able to capture that volatility, and we'll talk a little bit about the funky thing that helped us adapt to the volatility in the Dow, and essentially how these models are sort of like chameleons. They adapt to the current conditions, and they give you the best sort of edge possible to win. Let's dive into charts and take a look at what happened today. We'll start with the S&P futures, and we'll approach this market the way we approach all of our markets. We take a look during our line hour test at 7 a.m. Pacific to check whether or not the S&P breached either side's aggressive volatility box entry lines. We see here that we very clearly didn't, and that gave us permission to continue to use the aggressive volatility box. Our entry came into the next hour, where price fell into the cyan blue lines. This is when people thought we had broken all support. They were starting to look short. We were waiting for the market to come to this place. We had our orders ready to go at the beginning of the hour, had plenty of opportunity to get in. Our stop was outside of the volatility box, where we gave it 7.5 points of room. Our first target was a 7.5, which, as price action started to drop lower, our target line also came closer to our T1 line, where our T2 ended up being 8.75 points, which we did hit both of these. So our first target and our second target were winners on the S&P. And for the rest of the day then, we didn't really have any other entries unless you happened to catch the spike up. We did not. That was a valid short, but unfortunately that was the short that took our actual long orders out and gave us our T1s and our T2s. And by the time we got our second orders ready, we had already hit our T1 in this first follow through, and so the second retest was no longer valid. Moving on to the Nasdaq. We'll approach this the exact same way we just did the S&P. We'll draw our line and we'll take a look to see whether or not we breached either side's aggressive volatility box entry lines in that first hour. We did not, and that was our sign to continue to use the aggressive volatility box. And with the S&P falling, we also had the Nasdaq fall, and that gave us our entry into this blue cyan line. Once again, plenty of time to get in. In fact, I think you had upwards of 20 minutes, 30 minutes to get in and get an even a better price than the cyan entry lines if you don't have your orders out there. Our stop was outside of the volatility box, 25 points wide. First target was the 25 points. Once again, as we sunk lower, this gave us our T2 line started to drop down a little bit. And so we did end up hitting our T2 line, which was 35 points away. And that gave us both a T1 and a T2 on the NASDAQ futures. Rest of the day, once again, no other entries as we stayed inside of the volatility box. Let's look at the Russell next. With the Russell, once again, we'll draw our line. We didn't have breaches on either side of the entry line, and that was our permission to continue to use the aggressive volatility box. Entry came at the same exact point. We had less of a follow through in the Russell. We only hit our T1, which is what we risked, and our stop was outside the volatility box, 4.5 points wide. We ended up hitting our 4.5 multiple times here, and that gave us our out for the Russell. Now, let's head on over to the Dow, where we can show you an example of what an adaptation to the current volatility looks like. So in the Dow, we'll repeat with the same exact test, where we look at that first hour and we check whether or not we breached either side's volatility box entry lines. We did. Sometimes what you'll notice in our videos, we talk about how if it's just the wick of the candle, we're okay continuing to use the aggressive volatility box, which would have worked today. But for us, that was our sign to switch on over to the conservative volatility box, follow our rules, because in an environment where 3 out of the 4 indices haven't even touched the aggressive lines, if one of them is touching the aggressive volatility box entry lines, then I'd like to look to be a little bit more conservative on that one particular indice, and that was the Dow for us. And so we switch to the conservative volatility box for the rest of the day. And what you'll notice is that second entry, instead of being inside of the clouds, our entry was actually exactly at the cyan entry lines. We had our entry perfectly to a T, giving us our absolute best sort of possible entry that there was actually for the entire day. Our stop was outside of the volatility box, 65 points wide. First target was the 65. Our second target was in the 170s range. We never ended up hitting that, but if you took off the contract towards the close, which is what we did actually in the very last candle, we waited till the end of the day. We took it off for 130 points. So we had a plus 65 with our first target and a plus 130 with our second target, giving us both a T1 and a T2. And finally, the bonds. So the bonds, once again, will draw our entry line. Let's go back to the aggressive volatility box to show you how we approach the bonds. We'll make sure we have our entry lines on, and we'll draw our lines to check the volatility box test. For the bonds, that's 6 a.m. Pacific, and we check to see whether or not we breached either side's aggressive volatility box entry lines. We did, and that was our sign to switch on over to the conservative volatility box. The conservative volatility box was able to contain price action in that first hour, so that then gave us permission to start to look at entries against either side of the volatility box. Our entry came where we had an opportunity to go short in the bonds, right here in the cyan blue entry line. Our stop was outside of the volatility box where we gave it 8 ticks of room. Our first target was the 8 ticks, which was hit right here, and our second target was 17 ticks, which was also hit, giving us a T1 and a T2. At this point, in our heads, we're assuming that the bonds are holding the conservative volatility box, and for the next hour, we already had our orders ready to go, and unfortunately, we're taken out in the same candle in which we were filled. It was almost a grand opening and a grand closing. We ended up losing on both of our contracts here, minus 6 ticks each. So unfortunately, the second trade in the bonds was a loser, and once we blew through this conservative volatility box, that was our sign to stick out the rest of the day in the bond markets and focus on the indices where we seem to have more consistent luck, where we're at our 100% winning rate. And finally, to conclude today's video, we'll talk about how the supply-demand edge indicators also gave us an edge today. We see we had tick signals go off right here, after which we had a down move, and then we also had our AD decline imbalance come in where we had an opportunity to go long, which also helped us position for the rest of the day. So if you had these on your charts, if you took advantage of them, fantastic. They probably served you really, really well today, and you could have used the volatility boxes to help you manage your stops and entry. Once again, this indicator is available for free for download on our site in case you don't already have it. It's been a fantastic little tool, just a few pieces of code. We even show you how we built it, but it's been one of the most powerful indicators so far as we've been discussing in our videos. Despite that loss in the bonds, we still ended the day up really nicely, up $3,600 and some change. That's a great start to September. It helps us get some confidence under our feet. It helps us get some house chips that we can start to play the rest of the week with, and it lets us approach the month with a winning attitude. That's the power of the volatility box. If you'd like to start using it, start trading with an edge at the edge, go ahead and sign up at tosindicators.com/volatilitybox. We do offer a 30-day risk-free trial, which makes this a no-brainer investment. We hope you all have a great night ahead. We look forward to another day of fun trading volatility tomorrow in the markets, and we hope that we continue to get these sorts of entries like we did today.